What's up everybody, welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony, let's jump in. Okay, happy Wednesday everybody. This is the second recording of this episode. The first one ended up being 30 minutes, which is just far too long. There was just so much to cover that's happened over the last 24 hours, but I tried to cut down as much as I can, and hopefully this is a shorter episode. We remember on Monday that the People's Bank of China, China's central bank, cut rates to stimulate the economy. Yesterday at a press conference, Sun Guofeng, an official with the People's Bank of China, expressed that the move to cut loan rates was, quote, aimed at lifting market confidence through the lowering of borrowing costs for companies, end quote. It was also intended to facilitate the issuing of government bonds and local government debt. It has become apparent over the last 24 hours that local governments will need it. It's now increasingly evident that Beijing policymakers are turning to the old playbook of debt-fueled infrastructure spending to maintain politically acceptable growth rates, increasing leverage in one part of the economy just as they force deleveraging on another, that is, the private property development sector, which we'll be discussing soon. Yesterday, Tuesday, the powerful National Development and Reform Commission said in light of more uncertainties in the first quarter of this year, infrastructure policy will be quote-unquote front-loaded, expressing that China will appropriately advance the development of infrastructure and steadily push forward construction of 102 mega projects that were already spelled out in the country's 14th five-year plan. The megacity of Shanghai isn't wasting time either. According to the director of the Shanghai Municipal Development and Reform Commission, speaking to state media yesterday, Shanghai will speed up the issuance and use of special government bonds to reach its 2022 goals, in what Chinese financial media outlet Yucheng is calling a $31.5 billion splurge. Yesterday, Beijing-based China research director at respected firm Geostrategic Dragonomics observed that China is now in a construction recession. Real value added of the construction sector has declined on a year-on-year basis for 2 consecutive quarters. This is the first time that this has happened since China has had quarterly GDP data. Okay, next up, the outbreak situation in China. Now, we've been discussing the outbreak situation almost every day in recent weeks, so let's just have a quick update today and then move on to the other China developments in this episode. The outbreak situation remains very concerning in China. Even state media isn't hiding that concern, with state-run Global Times writing today, quote, the positive cases made Beijing the third region after central China's Henan province and South China's Guangdong province that is battling both Delta and Omicron at the same time, end quote. There may be a piece of good news for the residents of Xi'an, however, who went into lockdown almost a month ago now. Today, Wednesday, the local government there reported no official new local cases. Whether you believe this to be accurate or not, at the very least it means that there will be more local pressure from residents to begin loosening restrictions in the coming days. The news for the approximately 100 million residents of Henan is not as positive though, with the situation there still remaining bad. The province, which has been under varying levels of lockdown for over a week now, reported 102 new locally transmitted symptomatic cases on Tuesday, up from 68 a day earlier, then several dozen more local cases on Wednesday today. And let's just keep in mind, guys, these are all official government numbers. Vice Foreign Minister Le Yucheng is fast earning a reputation as being the bad cop to Foreign Minister Wang Yi's good cop among China's top foreign policy decision makers, and rumors have it that he may be in line to replace Wang as China's future foreign minister. Yesterday, Tuesday, Le Yucheng attended and delivered a speech at the opening ceremony of the Macro Situation Annual Forum hosted by Renmin University in Beijing. The Vice Minister took the opportunity to speak about China's diplomatic work in 2021 and to attack the United States and others. Washington-based and respected China analyst Bill Bishop discussed the speech today, observing, quote, it is an excellent distillation of Xi Jinping diplomatic thought. Wolf warriorism is a key feature of Xi Jinping diplomatic thought, but in many ways the term obfuscates the much broader dynamic at play. which is the way Xi Jinping diplomatic thought has fundamentally changed the PRC's approach to the world, and especially to the United States. As an excellent distillation of Xi Jinping diplomatic thought, Le Yucheng's speech is worth looking at, especially for people in the United States, from policymakers to business people, curious about how the diplomatic elite in the People's Republic of China view their country currently. We can hear a deep sense of grievance, indignation, and even moral superiority in the language that was adopted by Mr. Le. Now, this is quite a long quote, but I think it is very representative of elite attitudes in Beijing currently, so we need to go through some of it. For those of you who are not interested, the chapters are incorporated in the video in the description below, so you can skip to the next part of the video, the next developments if you want. But here are some key extracts from the speech. Looking back on the diplomatic work from the past year, I personally have a strong feeling. Now there are too many international frauds and too many lies against China. So China's diplomacy has to spend a lot of energy on disinfection to maintain the truth. We have seen individual countries, under the banner of multilateralism, engage in small circle and group politics, interfering in other countries' internal affairs under the guise of human rights, engaging in unilateral sanctions and long-arm jurisdiction, wearing the cloak of democracy, then swindling everyone in sight, concocting the farce of democracy against authoritarianism and other nonsense. American politicians are still blabbing about genocide in Xinjiang and unfairness in Hong Kong's Legislative Council elections, and another group of Chinese high-tech enterprises were unjustifiably sanctioned by the United States. The United States has repeatedly stated that it wants to carry out extreme competition with China. What is extreme competition? To put it bluntly, it is to suppress China by any means necessary, including framing China, influencing international institutions and rules, forming anti-China alliances, undermining the Belt and Road Initiative, alienating China's relations with other countries, manipulating international public opinion, decoupling from China in key areas, enhancing military deterrence against China, and so on and so on, effectively wanting to kill China. In the face of such extreme competition, do you still expect China to remain indifferent? To bind our hands and turn ourselves in? To be lambs to be slaughtered? These are imperial dreams from more than 100 years ago. It's time for you to wake up. China defends justice and opposes hegemony, demonstrating due integrity and responsibility as a world power. We have won respect and praise from the international community. End quote. Okay, we'll go on to something a little bit lighter. This week, the German Chamber of Commerce in China published its annual business confidence survey, granting us a look into the attitudes of companies in the world's fourth largest economy. What did corporate Germany have to say? Well, according to the survey report, preferential treatment of local companies in China has become the most significant regulatory challenge for German businesses in the country. 1/3, 34%, of German companies report experiencing unfavorable treatment in the mainland. However, the report also expressed that German companies in China are confident about the current year. In 2021, almost 60% of companies in China reported improved business, and more than half expect an improvement of the development in their industry in China in 2022. The Chinese market remains one of the most significant global markets for German companies. 71% of companies intend to increase their investments in China, and in stark contrast to Japanese and US companies in recent years, only 4% of German companies surveyed said that they were thinking about leaving China. However, German companies are less optimistic about Chinese consumption going forward. Only 51% of companies now see growth in domestic consumption as the biggest opportunity for their business in China, down from 73% last year. And while we are on Europe, yesterday, Tuesday, Taiwan confirmed that it is in talks with Slovenia to open representative offices on each other's soil, a move similar to one made by Lithuania last year, which got the country in hot water with Beijing. Indeed, the small European country was already not in Beijing's good books after the country's prime minister criticized China on Monday of this week and called on Beijing to let Taiwan into the World Health Organization. The prime minister expressed, quote, "Actually, we have normal relations with Taiwan. Last year, when we saw some good anti-pandemic measures in Taipei, I personally called the health minister of Taiwan, and we had an audio-video conference, exchanging our experiences." End quote. The Prime Minister then crossed what Beijing considers a red line, expressing, quote, "They are a democratic country. You know, Taiwan is a country which is democratic and respects all international democratic standards, international law included." End quote. And last up, the Evergrande Housing Crisis. Quickly, if you're enjoying the episode, don't forget to hit that like button. It's the only way this video can be shown to new people. And if you're watching this for the first time, you're getting some value from the episode, maybe consider subscribing, hit that bell notification, and you'll have the most up-to-date analysis when I release these every day. Okay, let's move on. In a research note from Bloomberg's Intelligence Real Estate Unit in Hong Kong yesterday, the analysts warned investors that China's debt-saddled private property developers face growing risks of a liquidity crunch, with home buyers and bondholders' shattered confidence rising the specter of broader financial contagion. Quote, "Some companies may take a cue from Guangzhou RNF Properties Co. by extending debt terms or taking a haircut on portions. Companies may also follow Sunic China Holdings Limited and Shimao Group Holdings Limited, with equity placements at ultra-low valuations and deep discounts." End quote. The piece argued that top state-owned developers such as China Overseas Land and Investment Limited and China Resources Land Limited, with balance sheets exceeding 1 trillion, could be well positioned for mergers and acquisitions as they buy from distressed private sector competitors at fire sale prices. This is of course what we have been predicting and following on China Update for months now. Indeed, we can see the soft nationalization happening before our eyes. Chinese financial media outlet Caixin Media reported today that Evergrande, whose operations were taken over by a local government working group late last year, has transferred several projects across the country in Kunming and Foshan in the south and Jiangsu in the east to local state-owned enterprise property development companies. According to the Caixin article, the local government working group has basically completed a basic audit of Evergrande at the HQ and is now conducting a deeper audit at the regional levels across the country. It looks like more Evergrande projects will be handed over to state-owned enterprises in the future, and we may well see further local government land or project confiscations, like we saw in Danzhou last month or Sichuan the month before. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.